another big news related to the very issue that we are talking about, and that is the Luthra brothers who have absconded but are currently in the custody of Phuket police. So Indian officers have managed to reach in Phuket for Luthra's custody. These two brothers will be brought back to India, which is what is expected, that they will be brought back to India. They will first be brought to Mumbai, and from there they will be taken to Goa and handed over to Goa police. Now, joining us live now is India Today's Gaurav Sawant. Gaurav, what are we hearing? How are these two men who managed to escape earlier are being brought to book?
So as of now, a team of Indian officials will have to present the details of investigations so far into this gruesome incident in which 25 people lost their lives. And as Srishti was pointing out, investigators say that it was subsequent to the incident that two booked a ticket and fled the country because they knew prima facie what they'd done was wrong. They were trying to escape the long arm of the law and took a flight to Phuket. Now an effort is being made. While they've been arrested based on the CBI seeking an Interpol Blue Corner notice. They've been taken into custody. They're currently in a detention cell. They will be produced in a court of law where there would be an argument where prosecution from India and Thailand will present details of investigation in this case so far, and prima facie what's the case that's made out against them. That includes murder/manslaughter, criminal negligence, and also fleeing from justice, evading justice. Based on that, a decision will subsequently be taken whether they will be sent back to India, repatriated to India, and how quickly, which is likely to happen anytime in the next 12 to 24 hours, hopefully.
Thank you, Gaurav, for those details. So this is the expectation that, and India is waiting for these men to be brought back so that they can face the justice. And we bring you another big revelation as far as the Luthra brothers are concerned. It seems that on a single address, the brothers had registered 42 companies, most likely shell companies. They are all linked to one single address, a network, an empire that was probably a lot on paper. So these brothers are now being investigated for all of this. This single address is of North Delhi. These brothers claim that they have a business which is worth billions, and it is a restaurant industry business. But the documents are telling a completely different story. The Luthra brothers, accused in the Birch by Romeo Lane fire incident in Goa, and are considered influential in the hospitality sector. Joining us right now is India Today's Arvind Oja. Arvind, ये बताएं कि एक पता, एक एड्रेस और उस पर 42 कंपनीज, ये क्या मामला है?
देखिए, बिल्कुल वो इंडिया टुडे ने जो डॉक्यूमेंट भी एक्सेस किया है जो लूथरा ब्रदर्स है उनकी कंपनी का, नॉर्थ दिल्ली का जो हडसन लेन इलाका है वहां पर इनका एक ऑफिस है, और उसी ऑफिस के नाम पर 42 कंपनीज इन लोगों ने खोली हुई है, जिसमें से कई ऐसी हैं जो ऑपरेशनल भी नहीं है, वो कंपनी सिर्फ कागजों में है। अमूमन इस तरह की कंपनी का इस्तेमाल शेल कंपनियों के तौर पर किया जाता है, जिससे मनी लॉन्ड्रिंग की जा सके, पैसों का लेन देन किया जा सके। तो कहीं ना कहीं ये जो कंपनियां हैं वो भी अब शक के दायरे में आएंगी, जांच के दायरे में आएंगी, और बाकायदा एक के बाद एक जो डिटेल्स है वो इंडिया टुडे के पास मौजूद है। इसी में एक कंपनी है जिसमें दावा किया गया है कि फुकेट में एक आउटलेट खोला हुआ है इस कंपनी ने, लेकिन वो भी सिर्फ कागजों में है। तो ये 42 कंपनी है जिसकी डिटेल इंडिया टुडे के पास है, जिसको देखने पर ये पता चलता है कि ये शेल कंपनियां हैं, क्योंकि ये एक ही एड्रेस पर ओपन हुई हैं। जी
शुक्रिया इस पूरी जानकारी के लिए अरविंद। So clearly there is much more to be investigated as far as Luthra brothers are concerned. And now it's time to go across to Sakshi Batra of Business Today with all the updates of the markets. Sakshi, over to you.
afternoon and welcome to the Market Closing Show. This is our collab show between Business Today and India Today Television. This is the 3 p.m. show where we get you all the market closing action. But first up, let's take a look at what's hot in corporate as well as the financial space. The trade deal talks currently underway in New Delhi could be the turning point. Chief Economic Advisor V. Anantha Nageshwaran tells Bloomberg most trade issues with the US are sorted. This also comes a day after the US trade representative had said that India is offering the best deals ever. Markets break a 3-day losing streak, shrugging off the expiry volatility. Remember, the Sensex is up by 300 points and the Nifty hovers around 25,900, boosted by the US Federal Reserve's 25 basis points of a rate cut and the positive outlook going forward. Even the broader markets are rallying as mid and small caps both have surged in trade. Also, buying can be seen in autos, pharma, private banks and other sectors. Also, silver prices have hit fresh record high levels on the MCX and is now trading at 1.93 lakh rupees per kilogram after the US Fed has delivered its third consecutive 25 basis points rates cut. The rupee has hit a fresh record low near 90.47 against the US dollar, slipping as banks bought dollars for corporate outflows despite the Fed's 25 basis points rate cut. Heavy dollar demand and stop losses triggered the drag in the currency. Indigo will offer compensation of up to 20,000 rupees to severely impacted passengers who were stranded for hours on December 3rd, 4th and 5th. These vouchers can be used for any future Indigo journeys within the next 12 months. Analysts have also said that the move will add considerable pressure to Indigo's margins. Let's straight away look at how the stock markets are trading at this point in time. Well, you do see after those 2 to 3 days of a carnage on D Street, some uptick as far as the Nifty is concerned. We are back above the 25,900 mark, up by about 0.5% and now trading near the day's high move. Look at even the Nifty Bank. That's also hovering strong, about 0.4% higher in trade. So as the Nifty Next 50 and some of the names within the mid and the small caps. Both these indices have bounced back. Remember, yesterday they were both down by over 1%. There is a bounce back in the broader markets as well. Both mid and small cap stocks sectors are also up and about in trade. Let's also pull up the key stocks that are in focus at this point in time to show you which are the top movers as far as the Nifty is concerned. Well, you can also see that, of course, a lot of names are actually coming in from the banking space there. You also have Adani Enterprises 2.8% higher, Zomato, that's Eternal, and also Kotak Mahindra Bank up by about 2% each. These are the stocks that are definitely the top movers on the Nifty. We also have Jio Finance, Tata Steel and Grasim as among those top gainers. Let's also go across to our guest now who's with us. Sharmila Joshi, market expert, is now joining in to share with us her view on the markets and of course what to expect going forward. Sharmila, warm welcome. Good afternoon to you. Good to have you as always. Do help us understand with your fresh take on the markets. Well, of course, we had been looking at a lot of cautiousness in the markets over the last couple of sessions, a lot of nervousness creeping in. But now two of the unknowns are getting sorted. One, of course, is the US Fed that has delivered a 25 basis points cut. That was a big anticipation already. That's pulling up the markets as well as the commodities, including silver. The second big uncertain point, which has been a big drag on the markets all through this year as far as the trade talks are concerned, seems like we are going to be seeing light at the end of the tunnel now.
Yes, absolutely. And one hopes that, though we've been hearing sort of positive signals for, I would say, the past month and a half, we've not really seen people sign across the dotted line, as they say. So let's hope we see that very soon, and that comes as a Christmas year-end gift to investors. Because honestly, we are not in a very, sort of in the best of spaces. Because while the indices do seem to suggest that we are very close to highs, if you were to do a little bit more of a drill down into where stock prices are, especially whether you're talking of large caps, whether you're talking of mid caps, you'll find that a lot of them are very, they're a distance away from, the highs that they made. So what we have here is a situation where you are not exactly, you're not unhappy, because there would be that odd 2 or 3 stock in your portfolio that's done well. But net your returns are not showing that you've done really anything in this last year. And it's been a tough year, because it's very difficult to really, especially in this last month, to really gauge where the market is, what the market is going to do on that day. So, I hope, as you were saying, that as things get settled, we enter 2026 with a lot more positivity.
Yes, the hopes are that we enter the new year in a lot more positive way, and probably things are just falling into place. Remember, India and the US may have just reached a breakthrough in the trade talks. Chief Economic Advisor V. Anantha Nageshwaran has now said that most of the outstanding issues have been resolved, and has also hinted that a deal could be reached by March. Currently, a US trade team is already in India for a two-day talk, which have begun yesterday. And for more on this, I'm now also joined by my colleague Karishma Sudani. Karishma, we've been all talking about last couple of days as to in the anticipation of all these talks happening. Finally, yesterday, we did see some signs coming positive from the US representatives, and now it's the Indian counterparts who are also hinting at that a deal could be reached now, finally, by March.
Sakshi, I'd like to actually reiterate what the Commerce Minister usually has been vocal about it, and also to us journalists in our press briefings, where he says that FTAs are not about timelines and deals are not about dates. Because if you remember, the hopes were that by November end, we'd be able to achieve a deal with the United States of America. Chief Economic Advisor had then also shared this optimism, but the vulnerability surrounding a trade deal with the US is pretty high because of the geopolitical issues, and especially strong sticking points, which even the USTR has bravely said that India is a tough negotiator, and we are. Why not? Because we are very careful about our sensitive sectors. While the hope and optimism is that this should not be far, like Chief Economic Advisor says, at least within the financial year. It looks like the current meeting that is underway in New Delhi with the officials from Washington is a strong stepping stone in order to get to a positive and a fair and a balanced deal.
Absolutely, Karishma. So we are going to be watching out for more signs that would indicate that a deal, nevertheless, is in the works and may happen sooner than later. And that's something that all the stock markets have been watching out for. Let me go across to Sharmila now and, take a view on the same with her. Sharmila, this has been the most uncertain point that the markets have all, tried to maneuver all through this year, starting from April up until now, by the end of the year 2025. And now we have the representatives from both the countries saying that, yes, a deal is in the works. We could finally have a deal in place by March now, if not as earlier as 2025, at least by the first quarter of the next calendar year. What do you think the markets will really look forward to when it comes to the trade deal finally getting sealed?
Yes, absolutely. And I think that what is also happening, on the sidelines is that while you hear your economic advisors saying that we are close to deals, you have, statements coming that seem to indicate that maybe we are not as close as we thought we were. Which is why I said it's important that it's sort of done. Because, at the end of the day, there are various sectors which are export facing, and you need to know where you stand, where those sectors are. Because, at the end of the day, whether it is the IT industry as an obvious, then, you have the pharmaceutical industry, you have autos. So there is a whole host of sectors today which have good exports, chemicals. So they have good exports, and we need to know how their future is going to be affected where US is concerned. Whether they should be textiles, I think, is another very important sector. And all of these have been hit, in this last year. So I think that while in these last quarter numbers, we did see positive indications from a lot of stocks and sectors. For really you to be able to, because, at the end of the day, the stock markets are all predictions. So if you think that a certain sector is going to perform in a way, you need to have that assurance that, your guarantee is in place, and this is the kind of duty structure that you could be looking at, and this is how you need to be pricing. This is what the outlook is going to be. And for the last 6 months, we've not been able to do that. So I think it's very important that finally, while I do agree that you have to be tough in your negotiations, one hopes that we've been tough enough and we have an answer sooner rather than later.
Absolutely. Well, Sharmila, apart from all of this, what has also really taken a lot of our attention this entire year is the IPO space as well. And the rush continues, the frenzy continues. We have more and more IPOs, even in this week ongoing. And there's also an indication that in 2026 also, there will be a record-breaking year when it comes to IPOs too. So when we're talking about the IPOs, remember the much anticipated ICICI Prudential AMC IPO, which is worth about 10,603 crores, that opens for public subscription tomorrow with bids set to run until December of 16. It has set a price band of 2,061 to 2,165 rupees per share. And this IPO will mark the fifth from ICICI Group to list on the Indian exchanges. To know more about the company's growth blueprint, we've also had my colleague Shail Bhatnagar, who's spoken to Nimesh Shah, the MD and the CEO of ICICI Prudential Asset Management Company, on the plans ahead. So let's listen into what the management had to say.
So we discussed that the industry is growing well. If you see the last 2 years growth rates, one of the factors that you decide the valuation is based on also how it is growing. If you see the last 2 years, which is mentioned in our DRHP and which I can talk about, is that it was almost growing more than 30% per annum. Whether the top line numbers or the bottom line numbers, they are growing at more than 30% per annum. And this is a very beautiful business where there is no capital required. So I don't need capital to grow. Very minimum capital you require, only to the extent that SEBI says that you have skin in the game, you have to invest in your own funds. To that extent only this company requires a total requirement of capital by managing almost more than 10 lakh crores of asset is 1,500 to 1,600 crores, which is actually going into the investment in the funds. So to that extent, we are a very capital light industry. A capital light industry which does not require capital to grow, which pays a dividend payout of the last so many years has been more than 75%. Even in our DRHP, we have stated that we will pay more than 60% minimum we endeavor to pay. If all the circumstances are normal, we'll pay more than 60%. So high dividend payout, high growth, the profit growth in the past has been good. There are a lot of drivers which says that the industry can do well in future also. We have got a market share of around 13.6% on the equity space in the market, which is actually the indicator of the strength in the retail business. And plus a low capital required. That means I can grow without increase. So look at any industry where capital is not required and there is growth, the PE ratio tends to be very high. So if you compare it with my peers also, the operating profit, this industry should be measured by operating profit and not PAT, because PAT is a function of other income also. So if you look at operating profit of this company vis-a-vis any other company in the industry, you will be able to look at the valuation numbers.
All right, actually, let's go across to Sharmila now to take a view on ICICI Prudential AMC and, of course, try to understand as well when it is stacking against HDFC AMC. How is it placed and how should one, as an investor, really look forward to this opportunity and probably think the best for their portfolios there? What are you assessing as far as ICICI Pru is concerned?
So I think several very valid points were made there, in terms of, how they've been growing, as well as the fact that it is a sort of a low cost business. And, if you were just to sort of join this with the AMFI data that we had earlier and the way we've been growing over the last 4 or 5 years, the way participation in equity, whether it is whether commodities, equity, ETS, everything, the way it has steadily been growing, what your SIP picture paints to you today, the kind of inflows that they are seeing, it all seems to suggest that we are now a market which is slowly beginning to participate more and more in all these instruments. And, given our size, I'm not in the this of saying that in every other country, this is the percentage of participation. So, and this is our population. So, this is the number. I don't know whether we can draw a straight parallel like that. But definitely, I think that where we are today in terms of our population, our size, and what the level of participation is, there is room to grow there. So I think without doubt, whether it's an HDFC AMC, whether it's an ICICI, whether it is SBI MF, whenever it decides to list, I think they're all offering us investors a good opportunity. And, I think then going forward, there will be other products based on this that which market participants will be able to use. So, as we become a more mature market, I think we will see the the benefits of that as these players get listed. So I'm very positive about the IPO as well as the entire capital market space.
Okay, positive about the entire capital markets and the growth story there, and AMC business at large, with the way the participation is increasing, with more and more people now betting big on the mutual funds and their SIPs growing. We've already had that data of record high flows coming in yet again. So we are going to be looking at it positively, as Sharmila really said. Let's talk about the overall IPO primary market space as well, Sharmila. I want to understand, what have you made out of the other IPOs? This week alone, we've actually seen about 6-7 IPOs also open up. We've had WeekFit, we've had Corona Remedies, we've had healthcare names, Nephrocare, we've had hospitals names as well. So how are you looking at this new pedigree of, IPOs that have come in? Anything that's, interested you? Misho listed on a substantial note. We've seen, robust listing for that one. AQS Limited also listed positively. Today there's slight profit taking, but for the second day in a row also, we did see a lot of move there.
Oh yes, I think while it is a very healthy sign for markets as a whole, when you have a buzzing IPO market, what we're also seeing right now, perhaps maybe that you need to be practice a little discretion in terms of what you want to invest in. Because one strategy has always been to apply for an IPO and to sell on the first day for listing gains. Now that thesis only holds good when the rest of the market is doing good, and we've had a lot of hits and misses as far as that is concerned. Also, I think a lot of players are now beginning to realize that what you're really doing in an offer for sale is allowing exit to earlier investors, which in my opinion is fine if you continue to see growth in the listed entity. If you think that the listed entity is going to be a business which is going to grow, then if you're providing an exit to an existing shareholder, you just need to really see whether you want to participate in the growth that you see for the stock going ahead. But that said, I think that it's become a slightly sort of a risky venture to make up your mind as to what is the story and what is the exact value, and do you really want to stay invested in it for the longer term, etc. So I think that you need to approach it with a little bit of caution and then take a call on, as I'm saying, on the business, whether you really see a growth panning out for that, and where their financials are, what the ask price is, and so on. One good strategy that I have applied is that you wait for it to get listed, allow 3 or 4 months to pass as a listed company, see quarter results, and then decide whether you want to really invest in the company.
Sharmila, I also wanted to ask you, as far as 2 of the other big news points are there. One is Indigo, of course, that we have been very, very closely watching out for all through the last one entire week, 10 days or so. There is some uptick yet again, because some brokerage houses do believe that structurally they do not feel anything is wrong, as yet with Indigo. As far as of course, the losses and the hit on the margins is concerned, that's probably going to be something that the investors will be watching out for the next couple of quarters there. What's your sense, and how are you approaching Indigo? Are you thinking of the absolute long term right now, and thinking, of course, this is a one-off incident, and Indigo, like its past, has always shown to be a wealth-creating stock, has shown profitability, consistent growth, and therefore can be continued to be seen as a good long-term bet? Or do you think, for those investors who are looking at it, must actually be very cautious over the next 2 quarters or so, and see how the pain is being settled into the books too?
So, a couple of things. First of all, I think that there is no taking away from the fact that Indians are traveling far more. So the entire industry, I'm not just talking of Indigo here, I'm talking of airlines, I'm talking of railways, I'm talking of hotels, everything. I think, we are seeing that growth, we are seeing the kind of prices that they get in peak holiday season, etc. And there is no taking away from the fact that that kind of discretionary spend is up, and it's likely to stay that way. So, once things sort of fall back into place, I'm sure Indigo will also benefit. The second, I think, point I'd like to really make in this regard is that I wish we had more listed players. Here I'm talking maybe more as a consumer, but just having 2 really, Air India and Indigo, as 2 domestic sort of players for a market of this size, is really, I think, insufficient. And this incident has clearly shown where those inefficiencies are. I mean, SpiceJet is there, Vistara is there, but they're in Akasa is there, but they're smaller players in that regard. So when an airline which has all flying to all the possible cities and having a number of flights in a day, we had only two players, which I think is something that we really need to think about. And third thing is that yes, you can say that things will fall back into place, etc. But this was something they knew that was going to happen. So I'm just curious as to why they didn't plan better for it, because we've not received any answer for that from the management as yet. That why didn't they plan better when they knew that this was being implemented in two phases and the second phase was going to hit them in November, and now as a result of that they've lost their peak holiday season, as well as they're going to have to pay lot of penalties to customers, etc. And they lost face in the in this interim. So I don't know whether I would really like to hear more from the management as to how they're going to write it and why they allowed it to happen in the first place, and then take a call from the stock. So I think market is very right in allowing the stock to correct where it has to. And in that sense, I always think market wisdom is, it takes everything into consideration and it's complete. So let's see where it takes us. But yes, having said all that, this is tourism, travel and tourism is a sector which again I continue to be very positive about.
Absolutely. And Sharmila, before we start to wrap up the markets, any key sectors or that are catching your attention right now, maybe looking at the valuation, where they offer value at this point in time, or maybe looking at better days ahead, like you pointed out initially in your comment, that 2026 could be much more positive than what we've seen 2025 pan out with a lot of uncertainties. So which are the sectors that will catch your attention first?
So first of all, the financial sector and all names over there, whether it is banks, whether it is the NBFCs, etc. Because I think the numbers also in this last quarter gave us enough room to sort of start thinking along those lines. And secondly, I think every sector that is going to benefit from the GST cuts. So I think autos is again one sector we've already started seeing it move, because they took the cuts and even the month-on-month numbers are reflecting that. And then as a related, I think maybe you can look at auto ancillaries, etc. and some of the other sort of discretionary spend sectors and FMCG, etc. So I think that's what my sort of broad outlook would be going into 2026.
Absolutely. Sharmila, let's look at how the markets have shut shop today. So just a tad below that 25,900 odd mark. You can see 136 points of a jump so far, better off than what we had seen the last couple of sessions pan out for the markets. 0.5% higher as far as the Nifty is concerned. The Nifty Bank also about 0.4% higher in trade at 59,204. There's a 244 point of a jump there. Let's look at the mid and the small caps. That's where some respite has come in after that very sharp sell-off that we saw yesterday. Over 1% higher for the, or almost 1% higher for both the mid and the small caps at this point in time. They've ended near the day's high point too. Let's also look at the key stocks that have actually caught the attention towards the end of the session. So Adani Enterprises remains the top mover towards the end of the session today. Zomato follows 2.7% higher, reversing some of the losses that we've seen over the last couple of sessions. We've also seen Tata Steel, Kotak Mahindra Bank and even Grasim up by about 2.5% each. Let's also look at where the pain was consistent in despite this improvement in the sentiment today. Asian Paints fell in trade. You also had Bharti Airtel that was down. Axis Bank was down as well. And these were the stocks that were actually down by about anywhere between 0.5% to almost 1%. Bajaj Finance, SBI Life and ONGC was also down in trade. All right, viewers, we'll also been tracking for you. Remember, we told you about how some of the biggest tech giants globally are betting big on India and India's AI growth story. The day Amazon announced India's biggest ever foreign investment, that of a whopping $35 billion over the next 4 years, Business Today Television in fact sat down with the man who unveils the tech and retail giants' mega plans for India. Here's an excerpt from the podcast where Amazon's Amit Agarwal breaks down why the company is doubling down on India, what this means for jobs in India, exports and AI-led skilling, and how India has become central to Amazon's global growth blueprint. You can watch also the entire conversation on Business Today, but let's look at the excerpt first.
This conversation is happening, and I didn't know, but I must tell our viewers that this is happening right hours after you have announced as a company a mega investment in India. So take us through that investment and also explain why India and why now.
When we started Sambhav back in 2020 and Jeff was here, Jeff boldly declared how the 21st century is likely to be India's century. And we made 3 pledges at that point in time. We said that we pledged to digitize 10 million SMBs, enable $20 billion in exports, and support 2 million jobs. So what we announced today was that we have delivered on those pledges ahead of time. And we also dimensionalized a little bit the investment that we have made between 2010 and 2024, that we invested $40 billion during that time frame, making Amazon the largest foreign investor in India, the largest enabler of exports in India, and one of the largest creator of jobs in the country. Now, as we look forward the next 5 years, and as I said, we have multiple businesses that are thriving and doing well, we estimate that we are going to invest an additional $35 billion until 2030, and which would allow us to take a bigger pledge across those 3 dimensions that I talked about. And essentially what we estimate is that based on the momentum that we are seeing in exports, we are aiming to enable $80 billion in exports, cumulative exports by 2030. We believe that we have the ability to support 3.8 million jobs by 2030, which is an incremental 1 million jobs. And on the digitization front, we are leaning into AI, which is probably the biggest disruption of our lifetime. And we want to empower 4 million government school kids with AI literacy and training. So all in all, we are very proud that Amazon is the largest foreign investor in the country and the largest enabler of exports and jobs. We've already invested $40 billion. We are promising to invest an additional $35 billion. And what we are seeing is our business and our priorities are perfectly aligned with this whole vision of Atmanirbhar and a Viksit Bharat, which is the theme of the Sambhav conference today.
All right, viewers, and you can actually watch the entire podcast on Business Today, and that's available on our YouTube channel and all across our social media platforms as well. Don't forget to catch in the biggest voice when it comes to global technology, talking big about the India growth story and why do they think that India is extremely important when it comes to their own investment and growth plans as well. With that, we also wrap up today's edition of the Business Today show. Stay tuned for more news coverage after the break. And also, we'll be back with another edition of Market Today tomorrow morning at 9.